Welcome back to Silent Trading, my friend. We are here to face the harsh truth. Most traders don't fail because they're lazy or unintelligent. They fail because they ignore the one truth that separates survivors from victims. Risk is not a number, it's a mindset. If you treat the market like a casino, it will treat you like a gambler. But if you approach it like a business, it may reward you slowly, painfully, but surely. I've been trading for over a decade. I've blown accounts, lost thousands, doubted myself, and nearly quit a dozen times. But I'm still here. And what kept me going was not a secret strategy or holy grail indicator. It was a brutal, honest commitment to risk management. Today, I'll walk you through the truth about why most traders fail and how to avoid becoming one of them. What this video will teach you. This video is not about strategies. It's not about how to make $5,000 a day. It's about survival. Because before you can profit in the markets, you need to survive long enough to learn. If you stay with me till the end, you'll walk away with a mindset built for survival, not just hope. I'll share the real reasons traders blow their accounts, the psychology behind poor risk decisions, personal stories of failure and transformation, concrete rules to manage risk and stay in the game. Subscribe now, not for entertainment, but for your survival in the market. Why most traders fail. Psychological traps. Most traders don't fail because they're dumb. Most traders don't fail because they don't learn technical analysis. They fail because they never learn to master themselves. In this video, we're not going to talk about indicators or strategies. We're going to talk about what really separates the 5% who survive from the 95% who blow up. This is about psychology, about discipline, about the truth no one tells you when you start trading. Let's start with how most traders begin. They see someone on YouTube making $500 in 5 minutes, or a screenshot showing 200% profit overnight. And they think, if I just learn the right strategy, I'll be rich. That thought is the first crack in the foundation. Because trading is not a get-rich-quick game. It's a psychological war against your emotions, against your ego, against your need for certainty in an uncertain world. Here's what usually happens. You win a few trades. You feel invincible. You increase your risk. Then one bad trade wipes out your gains. You panic. You revenge trade. You blow your account. Sound familiar? This is the emotional loop. And if you don't break it, you're already finished. The market punishes emotion. It doesn't care if you need the money. It doesn't care if it's your last $1,000. The market only rewards consistency and control. Most new traders don't have a system. They jump from one strategy to another, from one guru to the next. One week, they scalp. Next week, they swing trade. Then they try options. Then, crypto. This isn't trading. This is gambling in disguise. A real trader has a repeatable process, a daily routine, a fixed risk per trade, a checklist before every entry. If you don't have rules, the market will write them for you in red. My first real failure and what it taught me. Let me tell you a story. In my second year of trading, I built my account from $5,200 to $18,500 in 3 months. I thought I'd figured it out. Then I made one over-leveraged trade, and then another. Within 2 weeks, I'd lost almost everything. Not because the market was unfair, but because I didn't respect the downside. That loss broke me. but it also became the turning point of my trading career. What is risk management really? It's not just a stop loss or a percentage rule. Risk management is the discipline to say no, to walk away, to miss out, to protect what you've built. It's having a plan before you click buy. It's knowing how much you're willing to lose on each trade and sticking to it. It's trading smaller when you're emotional and sitting out when you're not at your best. The 5 rules that saved my career. 1. Never risk more than 1% of your capital on a single trade. 2. Always set a stop loss and never move it further once the trade is live. 3. If you lose 3 trades in a row, stop trading for the day. 4. Journal every trade, every win, every loss. The lesson is always there. 5. Take breaks. Burnout kills more traders than bad markets. The $15,000 loss that changed my life. 3 years into trading, I made a massive mistake. I broke all my rules on one surefire Forex trade. I didn't use a stop. I doubled down. I watched a $15,000 gain turn into a $15,000 loss. I couldn't sleep for nights. I questioned everything. But instead of quitting, I rebuilt. I went back to the basics. I treated trading like a business, one decision at a time. That's when my consistency began. If you've made it this far, I know you care. So if this video is giving you real value, please hit the like button. Share it with another trader. Leave a comment below with the biggest risk mistake you've made and what you learned. Let's build a community of serious traders. No hype, no noise, just real experience. Ego, the invisible killer. Even with a system, one thing still destroys traders. Ego. Ego says, this trade has to work. Ego says, I know better than the market. Ego says, I'll double my position to recover faster. Ego won't let you cut a loss. Ego won't let you admit you were wrong. And slowly, ego turns a small mistake into a catastrophic loss. True traders, they surrender to the market, not in weakness, but in humility. The real winners. So, who are the traders who survive? They're not the smartest. They're not the ones with the fanciest indicators. They're the most disciplined, the most self-aware, the ones who treat this like a business, not a lottery. They don't chase setups. They wait. They don't get high off wins. They don't get crushed by losses. They follow their plan, even when it's boring, especially when it's boring. If you're losing in trading right now, maybe the problem isn't your setup. Maybe the market isn't broken. Maybe. It's time to stop blaming the chart and start looking inward, because the real battle is you versus you. Common risk mistakes that kill accounts. Moving stop loss further because it's just a little pullback. Adding to losing positions, aka a revenge trading. Trading without a daily loss limit. Risking big after a win or after a loss. Tools and ratios you should use. The 1% rule. Never risk more than 1% of your account on one trade. Risk to reward ratio. Aim for at least 1 to 2 or 1 to 3. If you risk $100, aim to make $200 or $300. Position sizing calculators. Use them. Trailing stops to lock in profits without guessing tops. Trading while emotional or overleveraged. Risk management isn't just numbers. It's knowing when not to trade. If you're angry, tired, or desperate, walk away. If your position size makes you nervous, reduce it. If you can't sleep because of a trade, you're over-leveraged. Summary: what matters most? You won't win every trade. You're not supposed to. But if you manage risk consistently, you'll stay in the game long enough to find your edge. That's the truth. Trading success isn't about perfection. It's about survival, then consistency, then growth. I once mentored a young trader, smart guy, fast learner, but emotional. He lost half his account in a month. I told him to stop trading and journal instead. He did. Then, 6 months later, he came back calm, precise, disciplined. He's now trading full-time. So ask yourself, are you trading for the high? Or are you trading to build something real? If it's the second, subscribe. Join this journey. I'll be here trading silently. And if you found even one truth in this video, share it. Let's help more traders survive. Thank you.